Over the past year, according to studies, international capital flows reached a transaction volume of $837 billion. For 2018, a similar result is predicted. But while a decline is expected in North America, investment growth is projected in Europe and Asia. Real estate companies and investors are reacting to these shifts accordingly. I do think that investment flows are ultimately price sensitive, but the question is, of course, always investors' expectations about individual locations. In some regions, into which a great deal of capital is already flowing, expectations continue to rise sharply. But on the whole, a capital market works in such a way that capital flows where yields are still relatively high. The change in the investment flows can be traced from international capital flows. Megacities are in high demand among investors.
Asia is quite interesting because a lot of the money this year has gone into Hong Kong, more than Japan or China combined. And also a lot of money is going into house building, land banking for large projects for real estate operating companies. In Europe, slightly different. We've still got the UK, Germany, increasingly France, driving volumes so far this year.
Germany is an extremely popular location for investors from all over the world. At 42 billion euros, the transaction volume of commercial real estate after 9 months of 2018 is at 8% above the previous year's level. Well, in Germany, we're certainly a sort of island of the blessed at the moment. Because here, the real estate markets across Europe are actually rated best of all. And you can count on investors accepting the lowest returns. In stark contrast, there's the UK, our home market right now. There's much greater uncertainty there due to the impending Brexit. And here it could be a good idea to actually prepare for counter-cyclical investment after Brexit has taken place, in whatever form. In response to market uncertainties, niche products are becoming increasingly attractive to investors. Assisted living, retirement for the elderly. I can well imagine that being a part of established product sectors. With business parks, I currently see a similar development. And with student apartments too, maybe. A big discussion point at EXPO Real is the question of which location should be invested in. Are only the top A locations profitable, or are there attractive alternatives? It seems to me that recovering the B locations in Germany, and in many other countries of the world too, is very plausible. We've seen enormous price increases in the prime locations. These are gradually diffusing into the secondary locations in larger cities. And then, over the long term, into smaller municipalities as well. It's a long process, and that's why I believe that in B locations, for example, you can get very good returns. Investment, one of the big topics at Europe's biggest trade show for real estate and investment.